Okay. Having known what price action is, we are going to look at chart patterns. Okay. Now, there are basically two types of chart patterns. We have what we call the continuation patterns. Okay. Continuation patterns. And we have what we call reversal patterns. Now, if you look at these two types of patterns, with continuation patterns, you're basically looking for a trend to continue in a given direction. Okay. So once you have a trend or you price action saying that we have an upward trend where the price is making higher highs and higher lows, all you're going to look for is continuation patterns. But if you're anticipating a reversal in a trend, we are going to be looking at basically reversal patterns. So let's look at the continuation patterns here. We are going to look at triangles. Now, under triangles, we have so we have at least two types of triangles. Three, actually, there are three. We have ascending. Okay. We have descending. Okay. Guys, be attentive because this topic is very important. And we have what we call symmetrical. Okay. Then another continuation pattern you are going to look at, wedges. Okay. Okay. We're also going to look at what we call flags. Okay. Then we shall go ahead and we'll look at what we call pennants. Okay. So we have what we call rectangles. Okay. And many other patterns. But these are the few you're going to look at. Okay. Under reversal patterns, you're going to look at what we call double tops. Stroke double bottoms. Okay. We have what we call triple tops. Stroke bottoms. We have what we call wedges as well. They can be reversal patterns. We have what we call heads and shoulders. And inverse. If you want to take notes, you can take notes. And inverse, heads and shoulders. Then we also have what we call a HUM pattern. We have a HUM pattern. Okay. Then we have what we call engineered liquidity. Okay. So let's start on this one by one. Okay. Having known the types of patterns you're going to look at, now let's go ahead and look at them in detail. Okay. I said I'm going to erase this since I have all of them in the head. Let's start with one, what we call triangles. Okay. We are going to illustrate them here. We're going to start with the continuation patterns. We have triangles. So as I said, we have basically three types of triangles. Okay, so the first triangle is called the ascending triangle. Okay, now ascending, we are basically going to have a price having a flat area, but then we have price hitting this level. So if you add that, it makes what we call an ascending triangle. So in an ascending triangle, we're aiming at price breaking out of this area. We buy and put stop loss there. Okay, so this way you're going to set an ascending triangle in this format. Okay, the upper part is almost flat. All right, now this ascending triangle is always good in a market trending upwards when you're having a resistance area. Okay, so an ascending triangle has chances of breaking throughout the upper resistance. Okay, now we are going to look at what we call a descending triangle. Okay, now for a descending triangle, guys, tomorrow invite your friends who would wish to join. Okay, now for a descending triangle, the lower part is flat. Okay, we have a flat area. Then we have descending price action. By descending price action, price is going to come, go up, support, go up, then break through. So for the descending triangle, we want price to break through a kind of support at the bottom. Then price can retest and go down. Okay, yes. So the last one among triangles is what we call the symmetrical. So for symmetrical, okay, for symmetrical triangle, price is basically slanting on either side. Okay, price is slanting on either side. So this symmetrical triangle in most cases is tricky, but price can break either way. Okay, price can break up or price can break down. Okay, so for a symmetrical triangle, you should be very conversant of the trend you're in. All right, I think now we have known these types of triangles. Let's go to the charts and look at them. Before I continue, does anyone have a question? Let me unmute your microphones or you can type it. Okay. Does anyone have a question before I continue? Guys, is anyone having a question or I continue? Guys? Okay. Okay, let's continue. So now let me share the actual chart and we see how to use these triangles, okay? Now I'm going to go ahead and share my chart with you guys. Let me see how we can. Okay, you're going to see that on the chart. Okay. So hope all of you can see my chart. Now, if you're going to draw your triangles, in most cases, you should be very conversant with the topic of trend line. We're going to draw. So as I said in the earlier lessons, I want people to understand the market at a given point and understand it in detail. Before you look at a triangle or before you look at the patterns you're going to start, we're doing today, look at the chart, the price action of the chart on the higher time frame. What does this tell you? So if you're having an ascending price action or price in an upward trend, your work is going to be to look for patterns in an upward market. As we go ahead and do these things, you're going to find that they're very easy and you've been maybe lied to that they are hard, but you look at them and see how easy. Let's go in a very starting. We are going to look at the price action on that particular time frame. Then we go down. Okay. Now, probably today we're going to be looking at basically a triangle since we are doing a continuation type of price action. Okay. So you have to be very attentive because after this, I'm not going to repeat myself. And those ones who have missed will have missed because I'm not going to go backwards. So let's start with a high time frame, maybe a daily. So if you look at your daily, apparently, price is making what we call the price action is price is breaking lower highs. Okay, price is breaking lower highs, lower lows. Okay, price is breaking lower lows. So what comes to your mind as a pattern trader? Okay. So after doing this on a daily, you're going to go down on a lower time frame and identify what you're looking at. Okay. Now, I want you guys to be very conscious with what you're going to be doing here because I'm not going to repeat myself. Once you discover your price is in a downtrend, making lower highs and lower lows, since you have done triangles, your work is going to be basically to look for a triangle. Okay. Any kind of triangle. So if you're going to do a triangle, you're going to connect the utmost outer points like we did for trend lines and join them. Okay. If I join that like that, okay, then I come down and I join the points I see. Okay, like that. So that's what we call a descending triangle. Okay. So as soon as you have a breakout, you're going to have your entry at the breakout stop loss is above the breakout candle. Like that, and you take profit is the range of the triangle from here to there. Okay. So in most cases, you're going to take the pole, but I don't like taking the pole because it can be a swing. So a pole is from where the triangle began from, that is the pole, to down here. Okay. Now that's where you're going to take your take profit. I know guys are now confused. Any kind of question before I continue? Okay, seems guys are understanding. Now, once you see this kind of setup, all right. Oh my God. Okay. Let me repeat, okay? Let me repeat this. Let me repeat this. Let me repeat this. Okay. Now, let me repeat it with a plain chart without these triangles on. Now, as I said earlier, if you're having a triangle, okay, a triangle where the market is coming from, if it's an upward trend like that, you're going to have two types of triangles, okay, or three. You get. Now, the market will give you either an ascending triangle, which has a price action like this, a flat top and a slanting price action like that, okay? So price will come and play in this area, okay? So you have to practice a lot, okay? Probably you're seeing this on a lower time frame, maybe H1, M15, and it will break out. So where it breaks out is where you're going to put our entry, okay? Okay, the stop loss is below the breakout candle, okay? And the take profit is almost the same leg as the pole. So this move here, okay, where the triangle began from is what we call the pole, okay? This is the pole, okay? Pole, triangle, pole, okay? Are we now clear? Are we now clear with that? Or you're not understanding it? I go ahead and explain further. Okay. Okay. Now, this triangle can be either that or it can be the same thing, but when it is symmetrical. With symmetrical triangle, both sides are equal. Okay. The upper leg and the lower leg are almost in unequal kind of price action. Okay. So you're going to have something like this. Price goes up, price comes down, price goes up, price comes down, then boom, price breaks out. Okay. Now, how to determine the starting points? I cannot lie to you that you're going to find a specific determining a starting point. It's all going to come from your observations. Okay. It's going to come from your observations. Are we clear? So now the price can break out that way, or price can break out downwards. Then price can also form a descending triangle even in an upward market, something of the sort. Guys who are coming late, I doubt if I'll repeat myself, but let's go on. Okay. So price will come and give us a price action of that format. Then we have the pole. Okay. Then price will play here like that. Price will play like that. Price will play like that. Then boom, it breaks out. Okay. Now that's what we call triangles. Okay, guys. So I think now we are clear. We can go back to our charts. I think now let me change a pair here to give something which has out of price action, maybe GBP, USD. Okay. So guys, those ones who are learning, you can always invite your friends for these lessons. They are free of charge. Apart from the guys who have the paid classes, those ones I handle them separately. Now, what you're going to do is you're going to go to higher time frame, as I said earlier. Now, in the higher time frame, you're going to look for the price action. Okay. Now, price keeps breaking structure to the downside. Okay. By structure, I'm going to mean how is price behaving. Price is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So what do? You're going to slope down to a lower time frame. Okay. Yeah, you can wait for it, or you can trade an instant breakout. So after having this, you go down to maybe H4 and look for a triangle. Okay. Since you're dealing with triangles so far, we are going to be looking for triangles only in the lower time frames. Now, question is, since you're having a kind of price action that is descending, you don't have to, or you don't bother yourself with looking for maybe what we call high time frame structures. Okay. The high time frame structure is going down. Look for patterns that are also going down. So you're going to look for either descending triangle or a symmetrical triangle. Okay. Yep. Yes, that can be possible. But I want you to first go with the first principles, which I'll add the others later. So now, all of you, according to your observation, I see you can all see that this is a triangle here. If you can't see it, then you can tell me to repeat. But all of you, if you have been in my class since we began, can all of us agree that this is a triangle? By typing in the comment section. Our time is fast spent. Can you agree that that's a triangle, guys? Can we all agree to that, or it's not a triangle? Okay. But what is the price action doing? We have a pole. Okay. Then we have price action playing up inside that triangle. Okay. Price action playing inside that triangle. Then what happens after that? Boom, we break out. Okay. So if you're doing triangles, try to draw your trend lines at the wicks. Don't draw them at the body. So we are going to put our stop loss at the breakout candle. Okay, we're going short. So we are going to put here the entry stop loss at the breakout candle. Okay. Yeah, so the breakout candle slightly. Okay. Then the distance of the pole, which is this impulse, will come down here. So we are going to look at that when you're looking at what we call wedges and flags. Okay. So I think you can see how it moves slightly, then goes and hits your take profit. Okay. So let's look at some other past price action as well with the triangle. These are things you need to see on your charts every day. Okay. Guys, do you believe that this is a triangle? One like that. It's a descending triangle. Okay. So I'll try to explain how a descending triangle comes about. So a descending triangle is going to come in a case where the market impulses up, forms a price action like that. Then it makes that. Okay. So in most cases, when I say descending triangle, sometimes can either break down like that to do a reversal or break up to do a continuation. Okay. So in this case, we had it breaking downwards. Now it's a descending triangle. Why? The lower part is flat. Okay. It's a flat area. Then the other part is descending. Okay. But I wouldn't take this trade since I'm in a downward trend. So I would look around for another triangle. Maybe I would drop lower in that area where we said descending triangle. So we are going to look at something like what? Okay, this is an ascending one. Okay, upper part flat. Okay, then the lower part is ascending upwards. Okay, ascending upwards. Okay, so you find that I'll be interested in this triangle more than the other one up. Why? The high time frame price action is going downwards. Okay, so I think we have like a few minutes left. So I'll be interested in this kind of triangle compared to the other one up. So today I've done triangles. Tomorrow we are going to handle what we call wedges. Okay, wedges and flags. Okay, in any kind of triangle, the impulsive move before the triangle is what we call a pole. Okay, in most cases, this pole here is equal to the take profit levels. Okay, you can just take it from here and put it down here. That's your take profit level. So guys, the entry is always at the breakout candle. Above the breakout candle, that's where you're going to put your stop loss, and your take profit will be the size of the pole. Okay. So guys, thanks for attending the lesson. Keep inviting your friends for these free lessons. Maybe they can learn something. Unless you have any other question, I can stop the recording. You find the recording on our YouTube channel. Please like, share, comment, and subscribe. Thank you. So now we are going to go through a question session